Will the US election bring another stock market crash? I'll discuss that this week, plus my regular weekly market analysis and look at the day trade of the week on SNAP. So we have a big US election coming up, obviously, the presidential election coming up soon. And many are wondering if that will bring a stock market crash, particularly if Joe Biden were to win the presidency. When Donald Trump won, of course, we had a huge rally in the stock market because he's pro-business and lowered taxes, lowered regulations, and it was good for the market. Will Joe Biden winning the election cause a stock market crash? Will Trump winning the election cause a stock market crash? Well, I have no idea. But there is a way to figure it out by watching the charts, because you see, although the US election results will come in overnight, the stock market will not crash overnight. Now, it may open with weakness and give us the clue that it is headed lower, but after that initial signal, we can still act and avoid most of the damage. And that's really what's key, is if we can watch the charts for breaks of an upward trend line from a falling top, breakdowns with strong volume, we can see the crash coming. And we'll use the example of the COVID crash as what to look for in terms of determining whether there's going to be a crash. So ultimately, we want to look at what people are doing with their money, not what they are saying. Talk is cheap. If that upward trend line is broken, if the money is flowing out of the market, then we need to be defensive. So let's take a look at the chart of the S&P. Back in late February, early March, we had the break of the upward trend line. The first one was here, but that was not from a falling top. So to take that as an exit signal is pretty aggressive. Now, this one was important because there was quite strong volume there, and there was also strong price action. And by the way, I'm looking at a 30-day, 30-minute chart. So each one of these bars is a 30-minute bar. The following day, we had another spike lower, and now this one breaking this upward trend line, and now from a falling top. And again, volume was higher than normal, and price action was stronger than normal. That, to me, was a more significant signal to exit. Now, you didn't get out at the high. The highs were just under 340, 338 or so. But still, to get out of the market at 334 is not bad at all. Now, if you wanted to be really conservative and wait for a strong exit signal, then this break of horizontal support, again, from a falling top, that happened right there, that was an even stronger signal that the sellers were really gathering momentum and the buyers were stepping back from the market. And again, that wasn't too bad, 320 on the exit there. The market just a few days later was at 290. So I don't know what's going to happen with the US election, either do you. It's all fairly up in the air. Even though there's polls that tell us who was likely to win, the polls were wrong last time. So that I don't think is reliable either. But what is reliable is following what people do with their money. And all you have to do is look at the charts, look for those breaks of upward trend lines from falling tops, or breakdowns through horizontal support, especially if there is strong volume accelerating the market down through support. All right, let's get into this week's analysis. And as we always do, we will take a look at the US markets. And first up is a chart of the S&P 500. And you can see that we've been sort of trending in this downward sloping channel for the last week or two. And it really shows the market unwilling to make big moves ahead of that US election. There's an air of uncertainty in the market. Even in individual stocks, I find they'll move for an hour or two and then they'll kind of lose steam. And that, I think, is just a function of uncertainty, people not willing to make those strong bets. Now, what's important with this pattern is that the trend into the pattern was up. And the slope of this little downward trend is flatter than the slope up. That means this is a pause, most likely, in an upward trend. And if we can break this little downward trend line early next week, get up through 346, 347, then we may see the market try to work its way back to those 358 highs from early September. Looking at that longer term chart, again, you can see the lack of trend that we have been in for the last couple of months. The market has been really just waffling sideways with lots of volatility. You know, that volatility shows us that there is uncertainty, and volatility is good for traders, maybe not so good for long-term buy and hold investors, but if you are a trader, there's action, and that's good. The problem in the last 2 months is that we haven't had a trend. We had obviously a very strong trend coming out of the COVID crash, and now we're bouncing around. We need to get through this resistance with some volume as a signal that the market wants to go higher. And the US election may be the catalyst for that. And I think until the US election comes, we're going to be stuck in this volatile range. Looking at the NASDAQ 100, similar situation where we have a downward sloping channel, but this is something called a descending triangle. Notice how I've drawn that the tops are falling faster than the bottoms. And that is a sign that the sellers are losing their enthusiasm, because each time they push the market lower, they're not as forceful as they were the previous time. And this can culminate in a break of the downward trend line, which finishes the pattern. And so if we get a break of that downward sloping channel, the falling wedge pattern, then the market could move higher. That hasn't happened yet, but that's something for you to watch for next week as a signal to get back in if you are a short-term trader. All right, so now looking at the longer term chart of the NASDAQ 100 on the weekly time frame, very similar to the S&P chart. What we want to watch for is, does this upward trend line get broken from a falling top? And if that happens, then we'll need to get more defensive. Hasn't happened yet, but that's something to watch for in the weeks ahead. Perhaps as a result of the election, we'll get a break of that upward trend line. Looking at the Russell 2000, pretty quiet. You can see it's generally moving up, but there's not a lot of action in the last few months, generally going sideways. And so you have to be selective with the small cap stocks. There are big movers in the small cap sector. You just have to be extra fussy and picky about what trades you take. Onto the Canadian markets, and there you can see the Toronto Stock Exchange short term has had a bit more of a sell-off, a little steeper sell-off than the US markets, and it actually broke this upward trend line. So that's a bit of a negative, but it can redeem itself if it can break that downward trend line from a rising bottom, which could happen. It hasn't happened yet, but that's something to watch for. If we start to break down through this floor price, then I think we may test the lows over here. So that's something to keep an eye on. Longer term chart of the S&P or the TSX S&P 60 is basically the same as all the other market charts, but this one may be tickling through that upward trend line from a falling top. So I would be a little more cautious with the Canadian market as it is showing the early stages of a break of that long-term upward trend. TSX Venture is pretty much sideways and boring. Individual stocks can do well, but the overall market is not going to help those stocks move up. Looking at currencies, US dollar is testing support right now, and it tried to break the downward trend line. It did break the downward trend line, but now it's building that potential rising bottom. So if it can move up from a rising bottom here, then that would be positive. Hasn't done it yet, but that's what to watch for. If instead it breaks down through this support, then we're likely headed lower on the US dollar. So some simple things just to watch for through the week. Canadian dollar has actually done pretty well the last few months, coming back up to resistance where it got stuck once, and maybe now it'll get stuck again. But if ever it can break through, then we should start a little bit of an upward trend. Again, hasn't happened yet. It could just as easily break the upward trend line, in which case we'll need to get defensive with the Canadian dollar. And commodities, gold is right at the upward trend line. It's trying to break it, but it hasn't really been able to do so yet. Could probably pull back a little bit more before it hits that upward trend line. It's pretty quiet. It hasn't given us a breakdown, but the sector, you're not seeing a lot of strength in individual stocks. So you'll need to, I would say, be fairly cautious until we can get a strong break of this downward trend line. It tried 3 weeks ago. It hasn't really had any follow through yet. So we'll remain neutral short term on this. And finally, the oil chart, really sideways and boring. It's stable, which I suppose is a good thing, but it's certainly at prices that are a bit low for many oil producers to even profit from. And so the sector is pretty dead and quiet, and I think you want to be very cautious with Oil stocks. So finally the fear chart, and the fear is slowly falling, not a whole lot of fear, but it could erupt at any time with a break of trend. And if you get a break of upward trend lines from a falling top, then take a look at this VXX as a trading vehicle, because it can be quite profitable when the market crashes. All right, so then my ratings: US stocks neutral on both time frames, Canadian neutral on both time frames, gold neutral on both time frames, oil still bearish long term but neutral short term. Volatility is compressing in the stock market as investors wait for the US election to be resolved. We want to watch for abnormal breaks from the low volatility that the market is in right now, well, in the last few days, as a signal of where the market is likely to go. We're in that sideways range. We need to break out of that range in one way or another. Gold is at its upward trend line and should be watched for a break of that upward trend line. Hasn't happened, but keep an eye on that. Oil is boring, fear is moderate, but it is slowly falling. All right, so now let's get into the day trade of the week, and this is an example of a stock that we looked at in the active live service, which is available from Stockscores.com. You can go to the website and learn more about that. And with the day trade of the week, we're looking for action candles. Action candles are price bars that have abnormal price action with abnormal volume, often a signal of a trend. And if you combine action candles with the chart pattern recognition that I teach in the different courses that I do, you can get very profitable trades. So Snap was a great trader on Friday, traded huge volume. It was actually very good for the latter half of the week. It had some real good upward moves. And what we look for here is that action candle, and you can see it very early in the day, breaking from low volatility. And the only thing it lacked was strong volume. It was pretty good volume, not exceptionally strong, but it had good upward momentum, and so it was a decent setup. Now, for $100 of risk in this trade, you would buy 290 shares. That requires $11,500 of capital. But of course, if you are day trading, you can leverage your positions 3 to 1 if you so desire. So that means you only put up $3,835 in capital. Now, at the end of the day, the stock was at 10.3 times its risk, which meant for every $100 of risk, you made $1,030. That's a $1,030 gain on $3,800 of capital, a 26.8% return on a one-day hold. A great day trade, and we find these things every day in active live. All right, let's move along now to the Stockscores market scan. And with the Stockscores market scan, we are going to search through the entire market, Canadian and US potentially. That's the markets we cover, is all Canadian markets, all US markets, and looking for a different combination of the filters in the market scan. So we'll jump over to Stockscores now. And this week, I'm going to run the Stockscores Simple scan. Now, the Stockscores Simple, and we'll do the US version. The Stockscores Simple scan uses the stock scores. It looks for stocks that have a sentiment stock score of greater than 60 and a signal stock score of greater than 80. And then we combine that with a few other filters. But ultimately, we are looking at the charts to see if they have good chart patterns. We want to see stocks that are breaking from low volatility through resistance and have not already gone up a lot. You know, if the stock's been trending higher, it could still have a good stock score because it is a good hold, but that does not mean it is a good buy. So that's our job when we do this market scan, is to inspect the charts to make sure it's early stages of an upward trend, just breaking from a period of sideways trading. So let's run the market scan now. This went through every US market and found 84 stocks that have good stock scores right now. And our job now is to look at the charts to see if they have decent patterns. So the first one, GNUS, made a little bit of a break last week from some sideways trading. I wouldn't consider it great. I don't like stocks that have the big run and then have what I call the echo, which comes after the fact. They usually don't do as well, so I'm going to pass on that one. So moving along, this stock is breaking from what's called an ascending triangle. You can see the bottoms are rising towards a flat top. It's not quite through. It had pretty good volume on Friday. You can see the stock scores are in the right place. It's decent. I would give this a 6 out of 10, which means I think it has a 60% chance of moving higher. The reason I don't give it a 7 is the price action wasn't all that abnormal. It sort of quietly went through resistance, not in a big way. And then, of course, we'll have resistance up here at $5, which is okay, enough upside to justify the trade. But again, I think we're probably need to be a little fussier than that. So that's the formula. This stock started its run a month ago. It's a good hold. I wouldn't buy it now. We're looking for stocks breaking through resistance from low volatility. This one not quite through resistance yet. It's still underneath this high point. Again, pretty good. I'd give it a 6 out of 10, but I think we can always try to focus on stocks that are 7 out of 10s. Here you have a stock trying to start to move higher, but the volume isn't real supportive. So is it a bad stock? Not at all. I think it's a good looking stock, just not a great one. AP started moving probably a few weeks ago. That's a process. We just cycle through the charts looking for abnormal breaks from predictive patterns. So here's a predictive pattern. This is called a pennant pattern. I can draw, it doesn't let me draw that shallow. So that would be sort of the pattern there. Excuse my terrible drawing. And there we have the abnormal price break from the tip of the pennant with a little bit of volume coming in. Now it's not great. The price action looks good. The volume is good, but not great. I would give this one a 6.5 out of 10. Now, if you want to know how to do this stuff, watch some of the recent videos that I've got on the Stockscores YouTube channel, because there I share with you some of the techniques for reading chart patterns. Probably the best one to watch was about a Saturday ago, the video on the 6 elements of chart patterns, or the 6 things you must know to pick winning stocks. So go take a look at that video. Again, go to the Stockscores YouTube channel. You'll find it there. Hope that you've enjoyed this week's video. If so, please click on the like button. Leave a comment if you have any questions. I always take a look at those. But most importantly, subscribe to the channel, and as you go through trading next week, trade well.